Nvidia is out, everybody.
Fourth quarter revenue forecast did beat estimates. The company sees fourth quarter revenue $65 billion plus or minus 2%. Third quarter data center revenue coming in above estimates at $51.2 billion. The estimate was for $49.34 billion. Third quarter adjusted EPS at $1.30. Third quarter revenue $57.01 billion. Once again, the company sees fourth quarter revenue of $63.7 billion to $66.3 billion. The estimate was for $61.98 billion. Third quarter data center revenue coming in as a beat, $51.2 billion. Carol, stock moving higher in the after hours?
Up about 2.7% and gaining in the after hours. What's a big number, folks, is that data center number, because that definitely is a decent beat. Third quarter data center revenue, $51.2 billion. The estimate on the street was $49.34 billion. And then revenue overall, the outlook for the fourth quarter, revenue $65 billion plus or minus 2%. The estimate on the street is $62 billion. When we talked to Angelo Zeno, he said, listen, we got to look on the guide. It's got to be at least $61 to $62 billion. Well, they're looking above that. Nvidia's Jensen Huang in the commentary saying cloud GPUs are sold out. Also talking a little bit about expenses, operating expenses. As for the fourth quarter, adjusted operating expenses of $5 billion. That's a little bit above the street estimate, Tim, of 4.59. Investors don't seem to care, folks, because these numbers look to be pretty strong here. Gross margin, 73.6%. Street was looking for 73.7%. So essentially in line. But the stock off its highs, but still up about 4% here in the aftermarket.
I want to bring in Jay Goldberg, Senior Analyst, Semiconductors and Electronics with Seaport Research Partners. Jay currently has a sell rating on Nvidia, a target price of $140 per share. He's the only analyst tracked by Bloomberg that has a sell rating on Nvidia. He joins us from the Bay Area. Jay, I ask you each and every quarter, and I'm going to ask you again, is this print enough to get you to change your rating on the company?
No. Short answer, no.
Okay, why not?
I mean, it's an okay quarter. It was a good quarter, decent guide. At GTC DC 2 weeks ago, they put out that big revenue number, $500 billion over 5 quarters in revenue, which shocked everybody. I think what happened is they got more allocation from TSMC than they were expecting, so that's upside. That was more than I was expecting. But that's floated into numbers now, right? And you start listing all the things that could go wrong with Nvidia. That's a longer list than the things that could go right. So I still think they're challenged. I still think this is but I'll give them credit. This is a good quarter. I had actually raised my estimates last week because my checks were telling me they'd be doing pretty good. It's okay. I'll give them that. But one quarter, it's more than one quarter game here.
The street would seem to agree that it's a good quarter right now. Shares jumped 5% after that fourth quarter revenue outlook topped estimates. Nvidia giving that strong forecast that's countering fears of an AI bubble. We're also seeing, Carol, shares of CoreWeave and Nebius gained 4% after Nvidia earnings.
Yeah, Nvidia saying Blackwell Ultra is now our leading architecture. Also talked about H2O sales insignificant in the third quarter. Gaming revenue up on continued demand for Blackwell. Hey, Jay, what I want to ask you, and at least according to Bloomberg data, you have had this sell rating on Nvidia since at least April, and forgive me if it's a little bit longer, but the stock shares of Nvidia are up 71% in that time. Why do you hold on to that conviction? Because if anybody followed you, it wouldn't have been such a great call.
So I've told my clients all along, I've never told any of my clients to short Nvidia. What I've said is that Nvidia is going to underperform my sector, right? And I think that has actually played out. If you look at since I launched in April, if you look at shares of AMD, which I had a buy on for a long time, and ARM and Broadcom, Nvidia has generally underperformed the AI trade. Right, and then you start looking at some of the other stocks like SanDisk and Micron and companies like that who really overperformed in the AI because of AI. In this year, Nvidia is sort of the laggard in that AI trade, right? And I think the headwinds here just keep mounting.
So this is
yeah,
this is against looking at others in the sector is basically what you're saying. I'm pulling up the stocks. I mean, it's up about 57%, but that's, throwing in all the names together. And you're right. If I look at AMD, it definitely is up more than 100% since that late April call that you made. So yeah, there is some outperformance, but it is doing better than the overall sector.
Yeah, I mean, the market has gone up. All of these stocks have gone up a lot, right? And that part I'm not right about, but I do, I've maintained all along that Nvidia has gotten so large, it's just harder and harder for them to keep delivering these outsized beats that they were giving a year or two ago. And in that context, this quarter is good, but it's not a massive blowout. Part of the problem Nvidia has is it's the most scrutinized stock on the planet right now. People have all kinds of checks into the entire supply chain, and so we have a pretty good idea of what they can do and how they surprise us, how they deliver more than what's already baked into the numbers is pretty challenging.
Anything in here about China that you could see it and whether or not they're getting any clarity about what they could do in China?
So I don't have the press release yet, so I haven't read through it, but I know from talking to people in the sector is no, they've gotten nowhere with the U.S. government. Jensen has obviously been very vocal about that in the press lately, or he was until a few weeks ago. He's kind of stopped making comments about it because it wasn't helping him. And I think China is going to remain a problem for them. Nvidia is stuck having to walk this very fine line, right? They don't want to antagonize the U.S. government. They don't want to antagonize the Chinese government. And on some days, that's just not possible to walk that line. So it's going to be very tough for them. They really, really need to get back into China. I think it is become a major sort of weakening in their moat, and the problem is just going to grow the longer it goes on. So that's to me is a big concern. It's just one that's very hard to handicap because it's political in nature.
If they were back in China, would that change your take on this company and maybe your rating?
I don't think that alone would change my rating, but it's certainly top of my list of things that could go wrong here.